All right, everybody. So today I'm going to be focusing on predicting. Predicting what? Predicting highs and lows, higher highs and higher lows. Lower lows. All right. And how do you do this? Predicting higher highs and lower lows in advance. So methodology is so simple, anybody can do it. And I'll explain how it's done. And this is based on a principle of volume precedes price. Volume precedes price. But if you really think about it, all this is saying is accumulation precedes markup. Similarly, distribution precedes markdown. That's what it really is. All right, so predicting higher highs and low lows, you have to understand the principle of volume precedes price, and what that really means is accumulation precedes markup. So how that happens is you have, and this is, I'll show how to do this, but the idea is, you have rally and you have pullback. So when you have a pullback in this area here, you typically don't have a pullback and then an immediate continuation. There's some type of consolidation always occurs, and folks create patterns from them, ABC, triangles, wedges, etc. Right? But what you have is a lot of sideways action, and a lot of times you have a lot of green bars here. You have green bar, red bar, then green bar, green bar, and then a red bar, and then green bar. So that's the reaccumulation that's occurring. Reaccumulation, RA. So what you want to really pay attention to when you have a rally and a pullback, just notice the green to red ratio. Green to red ratio over here. If there are a lot of green bars and like few red bars, just understand why is that there's all this green candle, a little red candle, or you have a green, red, green, red, green. Just observe that. Because the green bars here, when they're a lot more than the red bars, it gives you a clue that there's potential reaccumulation that's occurring on the pullback. And it's very easy to do. You can just look at it and detect it. Now, indicator-wise, what happens is, even though another way of detecting it is through volume precedes price or accumulation precedes markup. When you're watching the green bar red bar ratio, what's happening is, let's say you use a simple tool like OBV. What happens is, you have that, and then in this area where you have reaccumulation, since OBV will be summing up the volumes here, even though price is in a range, because it's green, then red, and green, and it's summing up their volumes, it's going to break out. So while price is stuck here, OBV will break out and make a higher high. So it'll make a high here, and it'll precede price in making a higher high here. So that reaccumulation is detected by just watching the number of green to red ratio, which will lead to unbalanced volume breaking out and making a higher high. All right. On the pullback, it will break out prior to price, and that's volume precedes price. So now you're probably wondering how to do this, and I'll show you a real setup. So a real, let's go into the implementation. So if you're trading, let's say short term, and you have, let's say, whatever higher time frame. For day traders, typically they'll use hourly or 3 hour, 4 hour. So on the hourly, that's for example the hourly, you'll have you can put the unbalanced volume on it and look for higher highs occurring. All right, while price is in consolidation. It's that straightforward. So let's just go into some examples. So I'm going to go into this simple example here. I think I have like 2 of them here. This one here is natural gas. So for natural gas, after the first thing we have to see is the trend. Right? So let's just say our bias is on the upside because, for whatever reason, your bias is on the upside. Now you see over here, there's consolidation, right? There's consolidation. Now, first thing you want to see is that green to red ratio. So in the consolidation, let's just start off here. Green, red, green, green, red, green, 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 green. There's 1, 2, 3, 4, 5, 6, 7 green and 2 red. 7 to 2. 7 to 2. Even if you take it from the low pivot, it's 1, 2, 3, 4, 5, 6. 6 green to 1 red. Again, 1, 2, 3, 4, 5, 6. 6 green to 1 gray, or the red bar. So obviously, even though price is looking like it's consolidating, the green to red ratio favors the green 6 to 1. And what OBV will do is it'll sum up the volumes of those green bars and subtract the volume of the red bars. And what you notice is that it takes out the prior highs with a higher high right here. So this over here is predicting a higher high, meaning right here in this candle or bar, it's predicting the price is going to take out these highs. That's how you use it. So here you get the clue that price is going to take out all these highs because volume precedes price, and based on the green to red ratio or up to down ratio, it predicts that this is accumulation over here and price is going to go higher. Accumulation or reaccumulation, and price is going to go higher. And it's visible right here. See that? Let's do one more example. So this is copper. All right. So we already made the lows. Now I'm trying to figure out if this is going to go higher or not. Here we get the indication on this green bar. On this green bar, 2 hours prior, that price is going to take out this high. On this green bar, we get an indication that price is going to take out this high, and it did 2 hours in advance, meaning volume broke out. Actually, it even broke out over here. But anyway, whichever one you want to take. All right, so it's telling you here that it's going to break. And again, you use the green to red ratio. So going from the low, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green bars. What's the down bar ratio is 1, 2. From the pivot low, you have a 10 to 2 ratio. Green, green, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But at this point, it was 1, 2, 3, 4, 5, 6 green bars to 6 green up bars to 2 down red bars, or 2 down bars. So 6 to 2. So that's a 3 to 1 ratio. And that's why the unbalanced volume breaks out in advance, because when you have pullback and you have all those green bars, that means someone's buying the pullback. Why? Because every time it goes down, someone buys it up and brings the price to close green, close up. So there's the buying the low. Every time it goes down, buy it up. That's why it closes. Then it goes down, buy it up. And that's why you get all these green bars, right? Here's another example. Actually, this one already broke out, so it doesn't I guess you can do it over here with gold. So this here, you have one, I don't even know where to start with this, but here it was predicted the price would break out in advance of the breakout. Meaning right here you have high. So here you have 1, 2, 3, 4, 5. In this range you have 1, 2, 3, 4, 5 green to 1 down. 5 green up bars to 1 down bar. So that's why it breaks out. And then what happens? It actually breaks out. You see? So I've given you 3 current examples. Not cherry-picked, current, meaning here and now, of nat gas, copper, and gold, right? On how it works. Now, here's some things that I've noticed which will help you to use. And the great part about this is that anybody can use this. There's no, machine learning algorithm. There's no special indicator. There's no requirement. So it's very accessible, and anybody can put this on there because every platform has OBV. You don't need any special platform, and you don't need any special mathematics. All you do is just see what what you want to do is first check the trend, then see what's moving, see if on-balance volume is breaking out. So this is how you use on-balance volume. But specifically, I've explained how to use on-balance volume for predicting highs, and of course you use the same methodology for lows. So over here, for example, when price was doing this shake, it was going sideways, right? You see this range in crude? This range right here, it's now when we look at this range, how many red bars to green bars? Okay, 1, 2, 3, 4. How many green bars? 1. From the pivot high, 1 or 2. So double the ratio of red bars. It's actually 1, 2, 3, 4, 5. Or over here, this one here is good enough. So in this, it's predicting a breakdown. Even here, when the pivot was established, it was predicting with the low. See that? It's predicting low. But again, I want to put up some caveats to how to use this. The first thing is, don't mess with the trend. Everything is in the context of the trend. All right, because a lot of times they pull back because on-balance volume is not just for volume precedes price. It's also for detecting absorption. Meaning, if you have selling pressure that's going down and price is not going down, it's because buyers are absorbing. So you have to keep that in mind. That's not predicting, it's actually the opposite, it's absorption. So you gotta use trend first. After trend, so step 1, trend. After trend, wait for the support point. If it's a bull trend, wait for support point to be established, meaning a support pivot. You can use any indicator, zigzag or whatever. You wait for the support point to be established. Now, after you know the trend, if it's an uptrend, you wait for support. If it's resistance, you wait for resistance. If it's a downtrend, you wait for resistance pivot. An up pivot, resistance point. In this case, I'm waiting. It's an uptrend. I'm waiting for a support point. Once the support point is established, now it's game on. Now we wait. Why? Because accumulation will always be done near that low. It's not going to be done on the way, on the breakout. So you see, this is uptrend support point, right? Which has two higher lows before and after it. So it's a pivot, and then it starts moving sideways. With more green than green up bars than red bars. That's the accumulation, and that will be detected in your unbalanced volume indicator. The simple tool, but this is how you actually use it, not there are other ways, but from what I'm explaining, for volume precedes price, which is accumulation, this is how you do it. And so, for example, over here, I'm not really looking at anything until a support or resistance point is established. And then, when it goes sideways, as price is near support, I want evidence. That high right there, is evidence. That is actually higher than the price high. And that high right there is evidence, meaning they're making higher highs while relatively close to support. This one's very close to support. This one also is close. If you look at this pivot right here, this down one, because it's a pivot, how do you know? Because the bars before it and after it, 2 bars before and after it are above, like higher lows. So it's a pivot. It's a support point. And then while we're close to that support point, it's going sideways in price and accumulating because of the more green bars than red bars, and resulting in a higher high in volume. And volume precedes price, accumulation detected, accumulation forecasts markup. Just like distribution here, right here, precedes the markdown. This bar made low, here made low, more red than green, price is going sideways, but volume is breaking down. You see that? So we'll just use the same methodology. I'll show you a Bitcoin one that told me in advance that I was going to break down on Friday. So this is Bitcoin, right? And right here, actually it already broke, but this told me it was going to continue lower even after that green bar back up. I just knew that this low confirmed that we're taking out these lows. And if you still had if you still wanted to know, then right here in this bar, we make a lower low prior to price making the lower low 2 bars in advance. You see that? Volume makes the lower low 2 bars in advance, or at least 1 bar in advance. So 1 or 2. It's at least 1 bar in advance of price making the lows. Even here, in this bar here, it's close to the resistance. Here you made a low. That low, I don't think it was lower than this, but it told you something bad's going to happen. This told you something, I shouldn't say bad, but bearish is going to happen. This told you something bearish is going to happen. All right, so folks, this is a methodology based on a principle of volume precedes price, and it is used to predict a higher high that's going to come or a lower low that's going to come, because it has the ability to detect accumulation and distribution. And accumulation precedes markup and distribution precedes markdown. Right? The key to remember is you look at trend, then you wait for your support point or resistance point, then you look at the number of green bar to red bar ratio, and if it's obvious that there are a lot more green bars near support, then you look at the on balance volume to see if it's broken out already, even though price is consolidating near support. All right, that's about it. All right, thank you. Have a good day. Bye.